Okay, everybody, here we go. It is me, Gregory Mannarino, pre-market report on this Wednesday, August 9th, 2023. So much to talk about here. I almost don't know where to start. How about we just do this? It is now 8:08 a.m. Eastern Time. The market right now looks kind of like a muted open. Stock futures are slightly in the green. Are you looking at crude oil? It continues to get bid higher, $83 a barrel and counting. It's going up. You've known about this since crude $67 a barrel, and it's got a lot more to run in my view. The dollar this morning on a relative strength basis is slightly lower. The U.S. 10-year yield 4.06, I believe, so it has come up a little bit. The mmri sitting at about 256. Cryptocurrencies right now under a little pressure, except XRP, which seems to be bucking the trend this morning. Gold and silver are flat. That's the setup for this morning pre-market. Again, 8:09 a.m. Eastern Time. Now, I forgot to mention yesterday wholesale inventories. What does wholesale inventories tell us? Well, wholesale inventories are dropping. What this tells me and should tell you is, although we are hearing all this nonsensical talk about how we are not going into recession, our economy is strong, if this were a fact, why would these major corporations here be allowing their stock of wholesale items to drop? Does that make sense to you? No, I'm sure it doesn't. What's going on here is these major corporations have been preparing for something yet to be defined, much worse than recession, more like a depression, for quite a long time. We have seen these corporations lay off tens of thousands of people repeatedly month after month, and it continues right now. So these major corporations are preparing themselves for what obviously is coming. Consumers are done. They're maxed out, despite the fact that they continue to swipe and borrow into oblivion. There's a point here where they can't borrow anymore. And we're seeing this reflected in defaults across the board: credit cards, personal loans, auto loans, mortgages. So the consumer's done. Okay, the U.S. economy, 70% dependent on consumer spending. You all know that if you follow this blog here. So what we have here is an interesting situation. Again, major corporations preparing for something yet to be defined. Obviously, way worse than recession, more like depression or some other yet to be defined thing. Because again, crisis to crisis to crisis. The newest one right now, if you notice, after yesterday's downgrade of multiple banks with more to come, turn on Fox Business, Bloomberg, CNBC. Their mouths are all shut. They're being told not to speak about this, just like the whole escapade with the regional banks. Keep your mouth shut. Don't say anything. If people don't hear this stuff, they think it's gone. They think it's over with. No, it isn't at all. In my view, and I did an interview just yesterday with Lynette Zhang. I know we don't think this is over by a long shot, but I'll tell you something else. And I covered this just yesterday. Right now, as I mentioned, the mmri is 256. If they manage, and I think this is highly likely, if they manage to push the mmri down, Mannarino Market Risk Indicator, free to you, free to me, free to everybody, link in the description of this video, below 250, this market is going higher yet again. I mean, we've kind of been, the phenomenon is very interesting. We crossed 250 with regard to the mmri. This market has got all kinds of unhappy here. But that's not what they want. They must use the market as a mechanism here, a distraction tool, a deception. Look at the market. Look at the market. It's going higher. Oh, our economy is strong. It's doing fantastic. This is what they always do. So I don't think they're done. I mentioned just yesterday I bought a whole bunch more JEPI over the last couple of days. I believe they're going to push the 10-year yield lower, find a way to weaken the dollar on a relative strength basis, and we'll see the market get bid up here, especially with crude oil. Crude oil, the lifeblood of this market, the lifeblood of the military-industrial complex. They keep crude propped up. It not only does it put a boost underneath the entire energy sector, okay, you need exposure to commodities. I've been talking about this a long time, crude oil being a commodity, okay, but it also boosts the banks, which just got hit, okay, after their downgrade with more downgrades coming. More consolidation of the system, people. And speaking about that, I want to touch on the idea, and it's getting all kinds of talk, not just on YouTube, even on the mainstream, with regard to the central bank digital currency, which they're going to roll out, and I don't believe there is a way to stop it. This is a little excerpt I want to read to you from Real Clear Markets. You should pay attention to this, Real Clear Markets. I'm going to give them a little shout out here. So let me read this to you real quick, and I want to hear your take on this, all right? So the Federal Reserve is taking steps toward a potential rollout, how about it's going to happen, rollout of a central bank digital currency. Duh, I think we're all there. In attempting to do so, they are ignoring serious concerns about consumer privacy and heavy-handed government control in the United States and abroad. Again, this is not just a phenomenon here in the United States. What they're looking to do, okay, eventually, and this should be pretty obvious, is some kind of a cross-border currency, something that can be used worldwide, a one world currency. This is where this is going here, and it's all about control. And I want to give a shout out here to Real Clear Markets, because that's exactly what they're outlining here. There are serious concerns about consumer privacy and heavy-handed government control. That's exactly what's going on. Everywhere around the world, powerful heads of central banks, who are the real government, and politicians who are in bed with the central banks, who are the real government, are pushing central bank digital currency. Yet also around the globe, from the United States to Europe and Africa, and more general populace are rejecting the idea of a central bank digital currency and what it would entail. So basically what we have here is a worldwide public rejection of this new central bank digital currency. Right now, I want you to think about this. On this planet, on the entire planet, look this up for yourself. Don't take Greg Mannarino's word for this. There's roughly $1.3 trillion in actual U.S. dollars, or U.S. actual currency, okay? The rest of it isn't on the elemental chart. It doesn't exist. It exists in la-la land, in digital land, kind of where the stock market is, somewhere way beyond la-la land. So we already have a 99% digital system, kind of like how the purchasing power of the U.S. dollar is almost completely gone since the inception of the Federal Reserve in 1913. They want that last 2%. They're going to get it, all right? I don't believe, honestly, that there is a way to sidestep the rollout, and it's the inevitable rollout of central bank digital currencies. We're going to be forced to accept it. And the truth is, why do you think, and we've covered this repeatedly, they are creating dependency on the current system, dependency on the current system, a slave system. This is about control too. Of course, there are going to be people like you and me who understand the dangers of a central bank digital currency, more control, more taking away of our rights and liberties. That's what it's all about. But there are many people who are going to accept it and are willing to freely give up their liberties and rights and whatever else so they can be taken care of. And that's what we're going to on a worldwide scale. You understand? So keep all things in mind, all this in mind moving forward. Now, a couple of other things I wanted to talk about. And this, again, should be no surprise to you. You follow this blog. Mortgage demand continues to fall off of a cliff. People are done. They're absolutely done. And, they can't even make ends meet without borrowing and borrowing and borrowing more. And all they're doing is assuring themselves an obscure, wiped out financial existence as a slave to the system. It's very sad. So let me just say this too. What you and I can expect as they need to create more people who are dependent on the system, I really believe what I'm going to tell you, okay? More helicopter money, more stimmy checks. But our economy is so strong that they're going to have to issue more stimmy checks, stimulus. So find some other way. And with regard to the market itself, as I've been saying, central banks, none more so than this freak show, the Federal Reserve, is going to do more. They're going to prop up this market. They're going to buy more debt. And, all of this is massively inflationary. And you already know this. I'm preaching to the choir here. Oh, there's a new COVID variant. Oh, did you hear about that one? Yeah, we already got a warning from Moderna. They're trying to raise the fear specter so everyone runs out, and I got to get it. Look, I'm not even going to go there anymore. So anyway, going back to just real quick, this wholesale inventory issues, the wholesale inventories are falling. Putting together in your own head, does it make sense to you? We have thousands and thousands and tens of thousands of people being laid off by these corporations. Now we have wholesale inventories falling. I want you to put yourself, again, in the mindset that you're being lied to, and I know you get this already, from the propaganda ministry, trying to convince you yet again that there won't be a recession, that people are going to continue to go out there and spend and spend. Meanwhile, there's every sign. All the writing is on the walls, ceilings, floors, and everywhere else, that we are already in recession going into something yet to be defined. But you must not know that. Again, they don't want you to know where things are going. Expect the deception and the distraction of the stock market to continue. Especially, again, keep your eyes on the mmri. It's the greatest tool for understanding risk in this market I think has ever been created. Free for you, free to everybody. Link in the description of this video. If we drop below 250, who knows? Maybe we'll get there today. The market is going higher. So just keep these things in mind, all right? That's pretty much it, people, all right? You and I, we're going to meet later, 4:05 p.m. Eastern Time. Have your questions ready for me. Whatever you want to talk about, let's cover it. And again, this is not just my thing. This is our thing. With that, please share the video. Those thumbs up down here, the little thumb. It's so valuable. Get the video out there. It lets it be seen, okay? I'll see all of you later. That's all.